Hey guys, and thank you for watching Smart Money Minds. In today's episode, we're going to be talking about paper trading. What the heck is paper trading? I know stock trading, but how am I going to do some trading of paper? I guess I'll trade you 2 purple paper for 1 green paper. Fair trade? And no, that's not what paper trading is. Paper trading means fake stock trading. In other words, it's practicing your stock trading and investing. The stock market has been around for many years, and it's been around for such a long time. It's best to start taking charge of your finances instead of giving it to some random finance guy who's gonna look after your money for you, and they're gonna take a 4% fee on your 5% return on investment. So the biggest reason to paper trade is to really start understanding how to invest your money into the real market. The stock market is this giant, big thing that not everybody understands, and the easiest way to get to know it is to practice within it. So what you do is you just start trading and investing with fake money. And the platform that I use, called TradingView, allows you to start practicing, and it offers this service. Then you click into tradingview.com. This comes up, and all you have to do is join for free and create an account with this platform. And once you join the account, all you have to do is click onto the charts, which is highlighted here. And once you get into some of the charts, you can pick any chart that you like. Right now I have Beyond Meats, which is a very hot stock at this moment. But you see here where the yellow box is, it says paper trading. So at the bottom area there, paper trading, what you want to do is once you look in, you can paper trade. And these are the tabs for paper trading. You got positions, orders, history. It's just like a regular broker where you're setting your orders, you got your history, you have an account summary. If you look here where there's buy and sell, you can press into it and it gives you all the orders that you are allowed to have, which is market, limit, and stop orders. So you can participate and make fake trades. So you see here that's buy, and this is the sell part, and it allows you to buy and sell whatever shares that you're looking for. With this information, you can buy, sell, and set limit orders and stop orders according to real-time information. And don't forget that if you're only planning to trade with $10,000 or $20,000, you can always go to this screen here where the settings, and you can press reset paper trading account. And with this, you can set what amount, what balance you want to start with, so it reflects on your real life account that you want to practice on. So you're not gonna buy 10,000 stocks of Apple if you weren't gonna have that much money to buy it in the first place. There are plenty of benefits to paper trading, and in my experience, I find there are 2 main ones. Number 1 is that it's risk-free. You're not using your real hard-earned money to practice in the stock market, and yet you're using the real information that the market is generating. And you don't have to stress out over having your money locked in overnight or stress out over losing real money, because that could be extremely painful. Second main point I find for paper trading is for strategy testing and perfecting. You can use paper trading when trying to develop your new rules or guidelines for trading, or if you're trying something else new. For example, if you're trying to play something that's higher risk, or you're looking for a counter trend bounce, for example, and that's something you've never played before, then you can practice and see how the market reacts and see if your play works out as planned. And you can try this 10 times, 50 times, 100 times, 1,000 times, and it doesn't matter because you're not using real money, and you can use the statistics and see, oh, maybe out of 50 times, I got 40 times that it went as planned, and so that gives you a good probability of your play working out. So you can think of paper trading as having like a scrimmage in sports. The score doesn't really matter that much. You can try out some new moves, you can fail, you can fall on your face. There's no one really to judge you, and no one's out there to try to injure each other. Everyone's just playing for fun. However, this is the difference between paper trading and real life money trading. Because a scrimmage and a real game is very different, where there's stakes on the line, tensions are high, people are trying to win. One major difference between paper trading and real life money trading is the stock fill. So for example, if you want to buy 100 shares of something for $10, let's say if you're paper trading, if that stock hits $10, then you will automatically fill with 100 imaginary shares. However, in the real world, someone might only be willing to share or willing to sell 40 shares at $10, and so you might get a partial fill. So you only bought 40 shares from this other person, and you will have to wait for another person maybe willing to sell 60 shares at $10 in order to get your full 100 shares that you wanted to buy. And this is especially important because it comes down to two terms called liquidity and slippage. Liquidity is determined by the amount of shares being traded, which is represented as volume. If a lot of shares are being traded, then the name is very liquid. As the shares are being exchanged constantly and rapidly, this will lead to less spread between a buy and sell price. So that means maybe someone will buy at $10 and someone is willing to sell at $9.99. For example, let's say you're willing to sell 100 shares at $10 for a very illiquid stock. Then at this point, maybe only one person would want to buy 50 shares at $10. Let's say the next person is only willing to pay $9.90 to buy another 50 shares of that stock. And maybe at that point you'll feel like, okay, I have to lower my price to $9.90 to sell the rest of it. So therefore you average out to $9.95. So in order to look at how liquid a stock is, we're going to look at a couple examples. Let's look at Apple right now. You see how there's 30 million shares being traded in one day? Versus, let's look at a name like CVSI here, and it's only got almost 400,000 shares being traded. So the higher the volume that's being traded, the more liquid the name is, and the easier you'll get your fills for your names. Even with these fundamental differences between paper trading and real money trading, by using paper trading to practice your trading methods, your technical analysis, and applying your knowledge, you'll be light years ahead when you actually start using real money to invest in the markets. Think about gambling. If you wanted to learn how to play blackjack or poker, the worst way to go is to use real money, go to the casino, and try your luck, because that's a sure way to lose all your money. But if, let's say, you had some practice on some online poker or blackjack and you just played for fun, you'll be able to understand the mechanics and you'll be able to look for what the winning hands are and your probability of winning with certain hands as well. And paper trading is exactly the same concept but applied to investing. Lastly, I'll put a link below for TradingView, and that's where I do my paper trading. And you can start a free account and you can start paper trading today. And last but not least, in the comment section below, let me know if you've paper traded before and what are your thoughts on paper trading. I'd like to hear more of your comments and what you think about it. And make sure you subscribe, like my video, and make sure you hit that notification button. And then we'll see you next time.